Hey guys, Vinnie Mirchandani again. Great pleasure to have Daru with us this morning. Daru's got a long name. I'm just gonna, I'll let him introduce himself. But he's the ex-BP CTO, one of the most innovative executives I've ever dealt with. So this is a great time to bring him in to talk about, some of the major turmoil in energy markets, but also some of the innovation that is happening. Daru, welcome aboard. Tell us a little bit about yourself and the fantastic career you've had.
Thank you, Vinnie. Thanks for inviting me to this forum. Uh, I retired from BP as CTO around 2015, a few years ago, and since then I've been quite active, actually, in a lot of consulting assignments, as well as I'm on the board of several companies. So I've kind of kept in touch with what's going on both in the industry as well as in the digital world. My job for the last 15 years before I retired, I was very fortunate to have been appointed by our CEO, Lord Brown, to head up a team that was specifically charged with bringing innovation into BP, and not just innovation in the sense of R&D, but actually getting that implemented in various parts of BP. And he was very keen on getting specific results. So there were a number of topics we addressed, which included a lot of digital technology. So I'm kind of on the crossroads of both the oil and gas industry, long career there, but also a long career in the digital world.
I remember, Daru, I remember, I don't know, 15 years ago, you were talking about sensory networks on your tankers and refineries. That's way before anyone started talking about Internet of Things, right? You were pioneering it a decade before anybody else even thought about that. So yes, you've always been innovative. Daru, let's talk about the oil and gas sector to start with. It just seems like doom and gloom, right? Negative pricing, airline demand down, car demand down. But surely there has been a lot of acrobatics and positive stuff that's been going on under the doom and gloom. Tell us what you've been hearing.
So Vinny, first to set some context, I've been in this oil and gas business for 40 years. I've gone through about 5 or 6 of these shocks, as we call them. So in a sense, the industry is sort of used to it. I don't know if you can ever be used to it, but it certainly is sort of not a surprise. We expect that every few years something like this will happen. This time in particular, though, is probably the worst shock that we have faced in living memory, because most of the shocks in the past were essentially supply-side shocks. The demand was relatively steady, but something happened that disrupted the supply chain and caused havoc. Supply chains then kind of adjusted themselves in a few months or a year or two, and we got back to normal. This time, because of the Saudi-Russia situation, which already created a massive supply shock, it's now a demand-driven oil and gas situation. So there was plenty of supply, and then the coronavirus hit and the demand cratered by 25%. So when you combine both of those, this is an unprecedented shock to the industry. However, most of the majors, at least, and there will be shakeouts, most of the major oil and gas companies as well as the governments are going to adjust. They are well capitalized. They are not going to crater. Worst case, if this goes on for a long time, there will be some M&As, mergers and acquisitions like what happened in the 80s and the 90s. But the industry is going to survive because energy is a fundamental part of life, and it is, as the population of the world grows from 7 billion to 9 billion, the demand for energy is ever increasing, especially in the developing world. So the industry always looks at kind of a long-term perspective on things and does react quite quickly to short-term shocks, but always keeping the long-term in mind. So this is, in that sense, a more acute shock, but we've been there before.
So, we've been seeing obviously a lot of heroics in healthcare, right? We're seeing auto companies jump into medical ventilators. We're seeing 3M quadruple N95 mask capacity. We've seen banks just handle hundreds of thousands of new emergency loans and so on. What acrobatics are you seeing in the energy sector? Surely they've had to do some, with tankers. Just tell us some more of what you're seeing and hearing.
Well, there's obviously a drastic move from the trading side of the house to kind of balance supply and demand. On the financial side of the house, there is a drastic change in terms of capital spend. Most of the majors have cut back their capital spend by 20 to 30%. And the industry is very capital intensive. And so it is possible to slow down some of the new projects, not indefinitely, but maybe a year or two. So that is the other thing. There is a lot of interesting stuff happening on the financial side in terms of dividends, whether or not to maintain. Half the companies believe that we should maintain it because it's almost like a sacred thing for the oil and gas industry to maintain dividends. The others feel like you gotta adjust. So that's one thing that's happening. The other interesting thing that actually started even before the virus hit and is now becoming more intense is the whole area of operational efficiency. We have not shut down operations. We can't shut down operations. This is something that's a continuous process. So what we can do is try and make things as efficient as possible. One of the, I don't know whether it's an advantage or disadvantage, for the longest time, the oil industry has not been highly digitized. In fact, that was one of the things I was trying to bring in. And there are good reasons for that. It's a high-risk industry. People don't want to change. It's a very large industry, so it takes time to make changes. And finally, there is a risk to the change part. And if you're making money, even without making a change, why bother? So with all of those factors, in the early days, going back to about 10, 15 years, we started introducing digitization, and BP was one of the leaders in doing that. However, it was still one of those things that it's kind of a nice, interesting thing. But at the top of the house, it was a constant struggle to get that message across that we got to operate efficiently. Over the last, I would say, 5-7 years, the message has gotten across that digitization is a path to getting enormous efficiencies of scale. And with this virus and stuff pushing the break-even point down lower and lower, it used to be around $70, $80 in the early 2011, 2010 time frame. Then the shock of 2014 brought it down to about 70 or something. In 2016, 17, another shock hit, and we brought it down to 50 to 60. And now this coronavirus has pushed the limits to how efficient you got to be. And people are talking about 35 to 50 range of break even. So in a way, every shock has helped the industry become more and more efficient. It also tells you how much inefficiency was built into the system. So there is a lot of room to do that. Also, major oil companies have already been evaluating, and this is going to accelerate the evaluation of their portfolio. There are a number of old oil fields that we used to hang on to. Alaska is a great example. And now the push, at least in BP, is to get rid of a lot of the old fields and actually operate some of the most efficient new fields going. So not necessarily grow volumes, but grow efficiency. Yeah. There used to be a mantra in the oil industry that the bigger you are, the better, more volume, the better. But now it's getting a lot more focused on how do you increase that.
Daru, I remember talking to some of your team, you had pioneered drone inspections, right, in Alaska and other remote places. And during this crisis, it's unbelievable what drones have been used for, right? For disinfecting, for public information sharing, for thermal inspections. It's remarkable how quickly drones have become almost mainstream. And you've used automated ocean vessels, and you pioneered a lot of different technologies. It seems like everyone is now making them mainstream. I've
Right.
seen the oil industry pioneer new stuff during this crisis.
It's too soon to do that. But there is another thing in which is really hit, and that is working from home,
Yep.
which is a big deal in this. But we were actually very fortunate. The first time that this awareness hit us was after Hurricane Katrina in New Orleans. A lot of the offshore stuff in the Gulf of Mexico, this is in 2005. A lot of that stuff was staged out of Louisiana, and all of that came to a crashing halt and caused a... So actually in 2006, by the way, as you know, we used to conduct things called blue chalk events,
Right.
which were events where our CEO was looking at some big issues that the company faced and tried to address them. We had, I in fact went back and looked it up. In 2006, we had a major disruption blue chalk, which actually included the topic of pandemics. And out of that blue chalk came a number of different things. It included hurricanes and other things as well. But out of that came the whole area of setting up crisis centers and putting a process that was constantly managed to handle big crises. And it came handy when we had the Gulf of Mexico incident. Just a few years ago, when Hurricane Harvey hit Houston, our main offices, and this was true for many of the oil majors, were out of commission. Our office was out of commission for 1 year. So in a way, you can think of all of those things as helping us with this corona pandemic, because people, the infrastructure that we put in place was that people could work from home just as if they were in the office, with videos and VPN links and so on, so that the business was not disrupted. Our data centers were designed to have 3 or 4 mega data centers which all mirrored each other. So if one part was affected, you could do that. So in one sense, the oil and gas industry, perhaps, at least it's certainly true for BP, was better prepared for this kind of remote working. Now, what it has done is, the one area that is still not quite there is offshore platforms. And those have shown up as a major risk because it's an enclosed area, a small area where several hundred people work. And we've had infections on various platforms in the Gulf of Mexico. And so this, I believe, is going to accelerate the move towards remote operations. If not totally, but in a significant way. This has always been something that was talked about, but I'm sure that after this COVID, people are seriously thinking of how do you put that in place, which means enhanced fiber connectivity to the platforms and replication of everything into what we call an ACE environment, which is the advanced communication environment, where everything can be done from around there. It may not be 100%, but it'll get there pretty soon. So I think that's another push.
The oil industry has always been big on scenario planning, right?
Yes.
Long-term scenario planning. Were pandemics one of them that people had simulated, or is that something everyone missed?
Well, as part of that blue chalk event, as I said, there was a significant event includes thought leaders coming in and presenting these various ideas. And one of the thought leaders was highly focused on pandemics. At that time, it was viewed as kind of far out. But he did lay down, as you go through the notes, he actually said exactly what is happening today. He was very, a guy by the name of Dan Sharp. And then actually, the follow-up to the second day of that blue chalk is actually sitting down saying, what is BP going to do about it? Because talking about it doesn't mean. And that's where the crisis centers and all those things originated. So we were prepared. I would say the offshore platform thing is one big thing. And of course, the digitization agenda, which means that more and more stuff can be automated and doesn't put people in harm's way, is going to accelerate significantly. The third thing is as you are well aware, there was a tremendous push on the oil and gas industry to go towards the green agenda and environmental stuff going on. So most companies were looking at putting more significant capital investments towards the green side of energy, green energy, renewables, and so on. It'll be quite interesting to see what happens. There are two views of thought. One, and a debate is still going on. One is that with oil and gas prices so low in the future, incoming future, capital constrained, some of those ideas will probably be put on the shelf. The other view is it might accelerate the industry to diversify. However, the problem is that the returns from renewables are much less normally than from conventional oil and gas. So it's an interesting balancing act, and it'll be very interesting to see where the industry is going to emerge on the green agenda after all of this goes away.
But even if the big oil companies don't, for whatever reason, continue that shift to renewables, the low prices are going to threaten the renewables themselves, right? The pure play, solar, wind, and all that is going to be under a lot of pressure.
That is another big change, and that for the US, this is a mixed blessing, because in the one hand, we were self-sufficient in energy and fossil fuels. We don't really want to give that up because it's a geopolitical security issue. On the other hand, with low oil prices, the nation benefits because all the consumers of energy get low. So the US is in a nice place. Either way, it will benefit. There are other countries, of course, are going to be in a significantly different situation, like Saudi Arabia or Russia, which are dependent on it. So green energy is going to have a harder time, but most of the time it was not that cost effective anyways, but the government interventions are what was causing it. Like, California is pushing this hard, but they have the highest per kilowatt rate of any state in the country. So the activism may continue, but it'll be harder because I think the oil prices in the future are going to be 40, 50 readjusted downwards. Who knows? But that seems to be the likely outcome.
Daru, I remember talking to you, it must have been a decade ago, when you were talking about the heroics from the shale industry, right? Came out of nowhere. It's something that the big energy companies were totally surprised by.
Right.
Are we seeing the end of that heroism? I mean, is the shale industry going to survive this?
I think what happened around 2010, that same time we were talking about this, is that I would say an entirely different business model emerged for the shale industry than the traditional oil and gas model. Most people look at it as all single, but they're really two different business models. The traditional oil and gas industry is used to making large one-off investments, and like a big oil field in the Gulf of Mexico or in the North Sea, which they would put 4, 5, somewhere around 10, $20 billion up front, and then the field would operate for 20, 30, 40 years. So that was like the one-off big capital investment model. That was the traditional oil and gas. The shale model actually is much more of a manufacturing model, where instead of drilling maybe 4 or 5 wells a year on a platform, you drill 300 to 400 wells, and very efficiently. These are less expensive wells, and you do that a lot. So what the shale industry provides when you get a shock like this coronavirus is kind of a ramping factor, where you can ramp things down much quicker. The traditional oil and gas sector cannot be ramped down, and that was one of the challenges. The supply side, you had to keep pumping, whereas here you will see a much rapid ramp down. In fact, it's already happening. But that doesn't mean the sector goes away at all, because the reverse is also true. They can ramp up fairly quickly also. But the real issue now is going to be the financial capability of the small players, because the shale industry has like 1,000, 2,000 small players in that area, particularly in Texas. And many of them are going to go belly up. There's no question about it. They're not capitalized enough to be able to survive. But that doesn't mean that the stuff goes away. It'll simply be merged and bought up by the majors. The majors actually were late, as you said. They were a bit taken by surprise, asleep at the wheel. And now they have, over the last 10 years, they're really ramped up and bought into a lot of the reserves. So each of the majors is pushing more and more capital in that direction because that's the growth area. So what you'll find is that a lot of the small plays will either consolidate or be bought up by the majors. And eventually you'll end up with a few big players that dominate the shale industry as well, just like in any other industry. So that's going to be accelerated by this COVID thing.
Well, that's encouraging from the U.S. perspective then, that it won't disappear. Yeah. Daru, I've been asking every executive, do you see a V recovery, a sharp rebound? Do you see a gradual U recovery? Do you see a W, choppy, flare up, maybe slow down again, or different countries at different pace? Or do you see an L, dead for a while?
You mean oil and gas or in the economy as a whole?
Economy as a whole, and then oil and gas.
I think for both of them, I see, because the oil and gas fortunes are tied to the general economy. This is a demand side shock mainly. So as the demand picks up, the oil industry will follow. It's just they're two, totally intertwined. And then there is an underlying growth anyways as the population grows and so on. But in the short term, I would be more inclined to a U shape, maybe particularly for oil and gas spread over a couple of years. For the economy, maybe a year or so. I think the biggest issue that will change these shapes is the fear factor. And I don't know that any government, including China, really addressed this fear factor. Even when they open up businesses, you're seeing not many people going there. So this is not so much an economic or political issue as a fear, emotional thing. And governments will have to find a way to address the individual fears. It's just like the stock market, which is driven by fears. The economy this time is going to be driven not by any structural thing, but by people's emotions.
Daru, one final question. So, you've obviously been a very digital leader way before people had CDOs and so on. I'm seeing a lot of push towards digitalization as a result of this. Work from home, more automation, et cetera, et cetera. What advice would you give to executives from a digital guru? Any 2 or 3 key points?
Well, I would say that it's inevitable, so don't fight it. Second, don't go into this anything large scale. The approach that we have taken is start not so much from a digital standpoint, but from a business. What business problem are you trying to solve? And then look for a digital solution to that, rather than taking a digital thing and trying to force fit it. And start small, pilot it, learn from it, and then also look at other industries. The worst thing we do, many of the digital solutions that I brought into BP were already adopted sometimes 5-10 years ago in other industries like aerospace or the military or supply chain industries and so on. And for us, it was like a new thing. But look across industries, because many of the solutions have already been tried and implemented, and learn from them before you bring them into your company.
Daru, that is great. I know that's what your Blue Chalks and your team were always looking around, talking to VCs, talking to other industries. You were very, very, you spread your arms your wings very wide when you look for solutions. So that's great advice. But thank you so much. Thanks for sharing your wisdom. Stay healthy.
You too.
Bye-bye.
Take care. Bye-bye.